Here's a closing bell for today, Thursday, September 29th.
All right, there now your closing bell for Thursday. Really the only good news to search for. It's Friday tomorrow because there is a lot of red on the board. The Dow just about down 20% year to date after a 1.5% loss on this Thursday. And you can see rough outing for the S&P and NASDAQ, both down more than 2% as the NASDAQ's down 31% year to date. And as Perret told us, they're about to be suffering from Apple dragging the market down 5% on the lowering demand report. For a closer look at the broader markets, let's bring in Tim Pagliara, CapWealth CIO, and John Lynch, Comerica Wealth Management CIO. John, let's start with you. Are there more days like this ahead?
I'm afraid if you have a market down 2 and 3% and utilities are leading down 4%, that's not really a vote of confidence that we're seeing from investors. And you know, we've seen this repeatedly in midterm election years. You get the heightened volatility going into September, October, and I would just encourage investors that that volatility may indeed continue. I think third quarter earnings, we're going to hear a lot about reduced profit forecasts for next year's, but there is a history of resilience in the markets. We typically see about a 17% decline during the midterm election year, followed by, from that trough, the subsequent 12-month period, see a gain in excess of 30%. So the message to investors is, try and endure the difficult short term, because we do believe the longer term there is opportunity.
Tim, what do you think? Do you think a bear market rally is in the cards soon?
Yes, I wouldn't put a high probability on it, but typically you have 4 bear market rallies. Each one of them tests the bottom, and I think that will come in at some point early next week.
And John, you're predicting that we could see a double bottom looming. What are you keeping an eye on? What are you tracking in right now?
Well, that was my prediction last week. Unfortunately, today, if closing below 36.40, we're holding it right now. So if we close at that number, that would suggest, we're still within the range of a double bottom. We were below that today, so I got a little concerned about that. But investors, I talk to investors all the time, and the constant question I receive is the bottom in for the year? And we won't know that until we test it. And we're clearly testing it today. If we do close above that 36.40 number, which it looks like we're holding, that could be good enough for government work, if you will, from a technical support area. But it'll be really important to hold that 36.40 level during third quarter earnings season. So I don't think we're out of the woods yet, but the double bottom will be very important for investors to gain confidence going into next year.
Tim, the S&P, a new 2022 low. What are the technical levels you're watching in the months ahead?
Well, we're focused on individual companies. We're telling our clients and investors to ignore the indexes and the technicals. There are a number of good buys out there, all-weather type companies that will do well, we think, in a recession, with high dividend yields and strong balance sheets to compete and provide good total return over the next 12 months.
Tim, what are some of those companies? Can you give us some names?
First one would be Williams. It's a big pipeline concern. They've reaffirmed their guidance. It has a 5+% dividend yield, and it's in that space. You guys have talked about the Nord Stream pipeline all day. Natural gas is going to be a big component. There's going to be upward pressure on that all through next year. And so we think that's a great company to own. Lumen Technologies is another one. It's in the internet space. It will benefit from the infrastructure spending bill. And it has actually a 10% dividend yield. And this past week, they put out a tender offer to redeem a lot of their debt. So, we think they have high cash flow, strong balance sheet, compelling story for what investors should be looking for right now.
And John, when you look at some of these indexes and ETFs, do they look attractive to you at all, or where do you see the opportunities right now?
Sure. Well, again, the double bottom will be important, but we think, we're employing a barbell strategy, if you will, overweighting energy and healthcare in the current environment. And I do think that, if we're able to hold this 3640 area, 3,900 looks to be pretty good resistance, followed by 4,000, which is the 50-day moving average, and then the 200 days probably 4,200, 4,250. But definitely, we're overweight value relative to growth. And when I see days like yesterday, I get troubled when investors still get pulled into that mindset that the Bank of England or the Bank of Japan are going to intervene, and then we can discount long duration assets at next to nothing. And that's disappointing because that's a mindset I think investors need to break. And until we break that mindset, I don't think the bottom is in. And hopefully, we're close, and then investors can start thinking about earnings and income compounded annually for their longer term returns.
All right, John Lynch, always great to have you. Tim Pagliara, thanks so much for joining us as well.